Good afternoon, welcome to 𝐊𝐚𝐥𝐤 TV. James Preston with you for the Economic Corner, a show where we take a look at some of the major global economic announcements and movements. Let's start with the leader of the free world, the United States of America. While the US Federal Reserve is publicly committed to keeping interest rates near zero for some time, there are growing expectations that accelerating inflation could pressure the central bank to begin seriously debating the withdrawal of monetary stimulus. At the same time, central banks in other parts of the world are already adjusting monetary settings or preparing to dial back pandemic crisis mode stimulus measures. So on that note, let us take a quick look at global economies and their latest stance on interest rates. First up, we'll start with Japan. The Bank of Japan has maintained ultra-easy monetary policy for years in a long battle to revive stagnant consumer prices. A Fed tapering is unlikely to change that outlook. The key concern among the Bank of Japan policymakers is the risk of market turbulence that could boost investors' demand for the safe haven of yen. From Japanese maples to maple syrup, and the Bank of Canada became the first among the group of 7 nations to withdraw its pandemic-era stimulus, and it signalled that rates could begin to rise in 2022. On the other hand, China's central bank is trying to cool credit growth to help contain debt risk, but is treading warily to avoid hurting the economic recovery that remains uneven as consumption lags amidst the post-COVID-19 era. A Chinese central bank official said signals from the Fed on future policy shifts will have limited impacts on Chinese financial markets. In Norway, the Norwegian central bank plans to raise rates in the third or fourth quarter of 2021, likely making it the first among its G10 peers to increase the cost of borrowing since the pandemic began. Moving on now to Sweden, and Sweden's central bank has said it intends to complete its 700 billion Swedish crown asset purchase program as planned by the end of 2021. But the pace of asset purchases will decrease throughout the year. And after that, the Riksbank has said it will keep its balance sheet roughly unchanged, at least during 2021, replacing bonds that mature. As for our Pacific Ocean neighbours, the Reserve Bank of New Zealand has held rates at record lows but hinted at a hike as early as September next year as the country rapidly emerges from its pandemic slump. Moving on to South Korea, and the Bank of Korea signalled an eventual tilt towards tightening to end its run of record low rates, and upgraded its growth amid inflation projections. And in Turkey, double-digit inflation, persistent currency weakness, and badly depleted reserves have prompted Turkey's central bank to begin aggressively tightening policy in September last year, well before the emerging market peers. Its key rate is now one of the highest globally at 19%. The World Bank and others said that premature Fed tightening is the biggest risk for Turkey. The central bank is not expected to tighten anymore, in part due to public pressure from President Tayyip Erdogan to maintain monetary stimulus. Heading across to South America, and for Brazil, their central bank has raised its benchmark rate at its past 2 policy meetings and has indicated it will do so again with inflation expected to surge. On the other hand, in South Africa's central bank has kept rates low to support its economic recovery, but said upside inflation risks were beginning to emerge. Its governor said the recent spike in consumer prices was temporary, but that the bank would not hesitate to tighten policy if it became a permanent fixture. Casting an eye over to Asia now, and in Indonesia, the central bank's governor said in May that it must be prepared for a potential Fed tightening next year, warning that such a move could have an impact on local financial markets. Bank Indonesia has cut rates by a total of 150 basis points and injected more than $50 billion of liquidity since the pandemic began. And for the Philippines, Governor Benjamin Diokno has said the central bank is prepared for any change in Fed policy, but does not think the US bank will, quote, rock the boat ahead of US midterm elections next year. The BSP kept rates at record lows and pledged to maintain loose policy until it was sure the economy was on a path to recovery. And lastly, for India, the Reserve Bank of India, or the RBI, has kept rates at record lows as its economy struggles with a devastating new wave of COVID-19 infections. RBI Governor Shaktikanta Das said its growing foreign exchange reserves, which now exceed $600 billion, will help deal with, quote, challenges arising out of global spillovers. Well, that's a close to travelling around the globe, as any of us probably have gotten in the past 18 months, but we're not done jet setting just yet. There's information from the G7 meet that we need to get to right after a short break on 𝐊𝐶𝐥 TV.
At 𝐊𝐶𝐥 TV, we'll take you to the heart of the Australian equity market. We'll bring you breakthrough stories that highlight volatility, as well as tailwinds building across the length and breadth of markets. Whether space travel will gain momentum, while economies may gradually open amid vaccine rollouts, our experts will share their timely inputs. So join us on this exciting journey of live streaming, financial and stock market news. 𝐊𝐶𝐥 TV.
Hi, James Preston with you, and thanks for tuning in to the Economic Corner on 𝐊𝐶𝐥 TV. If you're just joining us, we've been taking a look at the movements of central banks across a number of nations, but now it's time to turn our sights to the important G7 meeting. From today until the 13th of June, G7 leaders are meeting in Cornwall in the United Kingdom. This gathering highlights renewed G7 vigour and clout, with the UK presidency committed to action. Leaders of the Group of 7 economies are about to hold a 3-day summit in the UK with climate change, the economy, the coronavirus pandemic and geopolitics all set to be major talking points. Leaders of the G7 economies are expected to announce a pledge to provide 1 billion coronavirus doses to poorer countries as part of a plan to, quote, vaccinate the world by the end of 2022. This is designed to address criticism that wealthy Western governments have secured the bulk of COVID-19 vaccines from manufacturers to immunise their own populations. The vow is also an attempt to counter vaccine diplomacy by Beijing and Moscow, which have both been quick to sell their jabs to developing nations. Hosting the G7 summit in Cornwall is UK Prime Minister Boris Johnson, and he is due to announce on Friday that the UK will donate 100 million surplus vaccine doses over the next 12 months. US President Joe Biden on Thursday unveiled a commitment to purchase 500 million COVID-19 vaccines made by biotech and Pfizer and donate them to some of the world's poorest countries. This includes 200 million this year and the rest in the first half of 2022. Let's now shift gears a tad, and US consumer prices climbed by 5% in May, the highest spike recorded since August 2008. The US is currently experiencing high inflation in the midst of economic recovery after the pandemic-induced downturn. The Labor Department's CPI data set comes as the Biden administration plans to pump more money into the economy that economists said would further escalate the price situation. However, minus the energy and food prices, the core price index, or CPI, grew by 3.8% in May compared to the figures in the same period over the last year. Prices of almost all consumer products have gone up, especially vehicles, on the back of rising steel prices. Costs of used trucks and cars grew by 7.3% as compared to last month, and it's one of the reasons why 1/3 of the index went up as well. Prices of airfares, furniture and apparels also have increased. In addition, costs of new vehicles increased due to computer chip shortage. Rental car prices also went up because the companies sold their vehicles when demand dwindled during the pandemic. And also, hotel room and airfare rates have increased as more people begun to travel after the easing of COVID-19 pandemic restrictions. The department also said that unemployment benefit claims continue to decline. Prices rose at an annual rate of 9.7% over the 3 months ending in May. Well, we're not quite done with the US. Just before we wrap up the Economic Corner, we'll cast an eye over new data from the Federal Reserve after a very short break right here on 𝐊𝐶𝐥 TV.
Property by 𝐊𝐶𝐥. Looking for a dream home? Well, that may sound easy, but it isn't. And from looking for a property that is the right fit for you in terms of cost and other factors, to zeroing down on the right mortgage plan, there are various aspects to consider. And for the latest lowdown in the property market, tune in on 𝐾ALKINE TV with me, Sage. I will give the latest updates on the property market as well as real estate stocks to help you make the right decision. Keep watching Property with 𝐾ALKINE.
Thanks for joining us on 𝐾ALKINE TV. James Preston with you, and this is the Economic Corner, where we take a look at some of the big economic updates and movements from around the globe. And our sights are currently set on the US, which has just released some new household wealth data. The Federal Reserve flow of funds data for first quarter of 2021 shows some quite remarkable figures. Despite the pandemic and the resulting lockdowns, business closures, and at its worst point, the loss of more than 20 million jobs, the US household balance sheet improved massively over the past 4 quarters, with total wealth now standing at $154.2 trillion US. Before the pandemic hit, total assets ended 2019 at $134.3 trillion US, falling to $127.8 trillion US at the end of March 2020, when financial markets were in capitulation mode. Non-financial assets, primary real estate, but it also includes things such as cars, jewellery and equipment, now totals $44.6 trillion US, while financial assets total $109.6 trillion. The largest categories here are pension entitlements, corporate equities, small business equity, mutual funds and time and savings deposits. Liabilities are at $17.2 trillion and are primarily mortgage and consumer loans, which leaves household net worth around $136.9 trillion. This is equivalent to 620% of US gross domestic product. Meanwhile, New Zealand's manufacturing sector remained at healthy levels of expansion for May, according to the latest BNZ. Business New Zealand Performance of Manufacturing Index, the seasonally adjusted PMI, was for May 58.6. This was 0.3 points higher than April. Business New Zealand's Executive Director for Manufacturing, Catherine Beard, said that the 2 major sub-index values of production and new orders remain the cornerstones of ongoing expansion in the sector. In contrast, employment continues to slip into lower expansion, while finished stocks and deliveries of raw materials remain above the 50-point mark. Well, that's all for the Economic Corner for today, and Friday is a very important day as the G Summit will begin formally this afternoon, and it'll run throughout the weekend. You can expect a comprehensive wrap of the outcomes from the G7 next week with 𝐾ALKINE TV. Sage will be with you in just a moment for another edition of Executive Corner Expert Talks and also the last trades. I'm James Preston for 𝐾ALKINE TV.